let's start. As you know, let's tell folks about yourself, your background, how you got here.
Yeah, thanks. Mike Magliochetti. I am a partner, an operating partner with Riverside Partners. We're a lower middle market private equity firm in Boston. My background is very different than my partners. Originally trained as a chemical engineer, PhD in chemical engineering, and after business school, I really focused more as a generalist and had the opportunity over 22 years before joining Riverside 13 years ago to run several companies in medical device diagnostics, some services through sale transactions. Mm-hmm. I was an advisor to Riverside for about 5 years while I was running my last company. And after the sales transaction, I was given the opportunity to join full time.
Nice.
Riverside has been around for 36 years, mm-hmm. Since day one, really focused on investing in healthcare companies. Our sweet spot is really founder or majority management-owned companies that are on a healthy growth trajectory, not distressed in any way. We're not turnaround folks. And quite honestly, these companies would be good companies whether or not they met us. Mm-hmm. They're at a point in their life cycle where the founders may have a couple of decades of sweat equity into the business, a good deal of their net worth concentrated in the company, and they're at a point where they want to take some liquidity, want to take some chips off the table and bring in a partner to take the company to the next level. And for us, we're not investors that show up once a quarter for board meetings. We're also not micromanagers. We have to believe that we can add value, and that can come in many different shapes and sizes depending mm-hmm. on the company and where they are in their life cycle. But more often than not, these companies need help with business development, scaling. Very often there's gaps in the executive leadership team to really mm-hmm. take the company to the next level. We'll also, when the company's ready, execute add-on acquisitions to get a business into different geographies, technologies, or diversification of clients. These are companies, when we invest as a platform, are generating revenues that yield EBITDA, EBITDA between, say, 3 and 10 million is our sweet spot. We can go higher than that. We look at, probably about 300 opportunities a year in healthcare. And maybe in a good year, we'll make 2 or 3 platform investments. It just comes down to that discipline behind whether or not we believe we can partner with the founders, partner with the management teams to take these companies to the next level. Today, we're investing out of our 6th fund, have about $1.2 billion under management today.
And when you're looking to do that growth investment, what size checks are you looking to write?
Typically, these are majority investments we're making. Mm-hmm. So anywhere between, say, 30 and 80, 90 million.
It's not small.
No.
Yeah,
no.
Which is good.
Yeah.
Which is good. And then as you're evaluating companies, as you said, they're often in a place where they'd be fine without you. But mm-hmm. what makes you want to invest in a company?
A couple of things are really key. And if at doing this over the years, you recognize this pattern recognition. Mm-hmm. These are companies that have sustainable businesses, they have strong management, and they really have a growth thesis mm-hmm. behind them. And for us, we have to really tick each one of those boxes.
And do you watch companies when they're smaller to see them get to that stage, or do you kind of wait till they're there? Like, what's your process?
Yeah, one part of my role that I really like is what we call deal origination. And when you're interacting with these founders and networking with these founders, getting to know them, getting them to trust you, that we're not your typical turn and burn. We're into companies 8, 9, 10 years. Mm-hmm. And so establishing those relationships over time, I may meet somebody, I may meet a founder, and they may not be ready for three years or so. Mm-hmm. And you just you interact. Sometimes it's actionable very quickly, but we're willing to do the time and get to have them be just as comfortable with us as we need to get with them.
Are there verticals that you prefer over others? Yeah, what are
yeah,
they?
For sure.
And also ones that you don't do, which is good to know as well.
Yeah, we like to say that we sell picks and shovels to the gold miners. We're not doing, we don't take any binary risk, but pharma services, contract manufacturing, CRO type work, bioanalytical laboratories, medical device contract manufacturing, tech-enabled healthcare services. Mm-hmm. So those are really the sectors that we like to play in.
Nice. And how do people get your attention? Is it through a website process? Is it reaching out on LinkedIn? Like, what's their way to get on your radar?
Yeah, I mean, we see deals every week from investment bankers.
Yeah.
It's just the opportunity to just connect personally at venues like this. LinkedIn is a great way. Zoom info I always use to try to network to founders and establish a relationship.
So build that relationship now while you're early, it sounds like, so that
Yeah.
when you're in a position to need growth capital,
Absolutely.
they already have that built with you. You've watched
Yeah.
them. You've seen that they're adaptable, resilient, all the things you're looking for, and know a little bit more about them, which shortens your diligence process.
Absolutely.
Hopefully.
Yeah.
Nice. What can the bullpen do to help you?
Again, introductions to potential, targets, if you will, these founders, or our portfolio companies, looking at our portfolio companies, these service providers, and I guarantee you there are companies here that could use their services.
Absolutely.
Yeah.
And any questions? Do I have to threaten you guys again? Maybe there's a car under the seat for somebody if they ask a question. It might be a matchbox. Yeah.
From an investor perspective, if you are in the process of leading around, let's say, in this market it's taking longer than usual, like what advice do you have for founders to kind of bring it to finish line? From an investor perspective, what would you like the founders to do?
Yeah, oftentimes if we see a company that is being represented by an investment banker, they're pretty buttoned up. I mean, they have a data room, they have a quality of earnings done, but the deals that we really like is, circumventing the investment banker, where it's not an auction process. We can really have establish a personal relationship with the founders. But these companies typically, you may have a company that's generating 20, 30 million in revenue, $5 million in EBITDA, and they have the cousin of the founder as a part-time accountant managing the finances on QuickBooks. So that's very, very difficult to diligence. So just really trying to make the path very, very easy from a diligence process for us, make it go very smoothly, because we can close, we can invest very quickly. Yeah.
Any other questions? All right, I want to ask, what's your fun fact when people come to you? What's your non-work thing they should know about
it's
you?
interesting time right now because for me, looking back on my career, before private equity, I had the opportunity to run companies in urology, orthopedics, oncology, and every time that I took a CEO position in those verticals, it was a very, very steep learning curve. I had to come up to speed very quickly if I was going to get in front of an orthopedic surgeon and be able to articulate a value proposition. And so when I made the transition to private equity, the MBA or not, it was a very, very steep learning curve. And so my process was to think 3 times before I spoke when I was going through these learning curves. And I kept a journal when I joined Riverside of all these idioms and phrases that I used in venture and PE that I thought, I rolled my eyes when I heard these phrases. And over the years, I was, this journal became 250 pages. And speaking to a acquaintance who's a professor at Columbia in their business school, he was asking me, how the hell does someone with a PhD in chemical engineering make it into private equity? And I told him about this process. And he said, my students would love to read that journal, and you should think about publishing it. So I kind of shrugged it off, and a couple of other folks mentioned the same thing. So the book is being published in September.
What's it called?
It's called Dancing Between the Toes of Elephants. The website is dancingelephants.book.com. And so it's interesting that the interest that I'm getting from students, actually, students that are studying business and finance that are thinking about careers in private equity, or if you've dealt with these folks, if you're working for a company that's VC financed or private equity financed, it's sort of a roadmap to these behind the scenes phrases with many case studies throughout.
That's fantastic.
Sorry for being so long-winded.
No, that's good. That was great, though. All right. Thank you so much.
Thanks.